Terrific.
Well, let me introduce you to Chris. Chris is my partner. Chris is pretty great. You know, we've been working together for a while. John is down in Fargo, as you know, Chris. Basically, I think the goal today is just to get a good understanding of each one of our perspectives, and then kind of distribute that information and as much as possible, and whether that be, you know, just off the cuff or also just, you know, Chris put together a little bit of a list of questions for you and wanted to know your perspective on some of the, you know, kind of not necessarily just crypto, but fiat based financial questions. I know maybe we'll start with a little background on what you did and what you've done in your career so far and where you sit.
Yeah, sure. Well, I'm a NDSU dude. So it was prior military, actually, from 96 to about 2000. I was in the regular Army. So once I got out, I went to NDSU, big golfer. So I played on the NDSU golf team. A couple of things I know, basically I stay in my lane: golf, crypto, and self-storage. So those are kind of my strengths. Banking industry, I'm pretty good with that too. After NDSU, I kind of got into the financial sector. I was everything from a mortgage loan officer, personal banker, wealth manager, like you name it, everything kind of in the financial sector, all the way from basically 10 years or so. I did that, 8 to 10 years. And then we started our self-storage facility in 2014. I went full-time basically in 2018. And I guess the rest is history. So been really diving into crypto the last couple of years. We got heavily into it in, the middle or end of 2020. So we got pretty lucky with that right before everything kind of took off. So yeah, good timing, I guess.
Beautiful.
Yeah, it's perfect.
Yeah,
works out. But awesome.
I think one place to start, you know, just from a national basis, and I know that there's going to be a bunch of people that watch this that are a lot more global, but North Dakota in the United States has been just a breeding ground for crypto mining. You know, there's where Chris and I, where I'm from more so, there's a $500 million project going up in the city of Grand Forks. Just signed a power purchase agreement with the local entity up here. I'm not sure on the megawatts, but I know it's 500 million of capital that they're putting forward. That's been in talks since last January. Chris and I have been talking with that company for a long time to get a power purchase agreement from them, and they've been so reluctant to do so. And now we know why, because they had that potential in the pipeline. They weren't sure if they were going to be able to meet it if they gave us power. Like when I say us, it's Chris and I, and I call us the little guy, but we were looking for 5 to 30 megawatts of power, right? And that's a lot of power. But they still couldn't do it because they had that in the pipeline. That's one in the state of North Dakota. I know there's another one going up in Jamestown that got snagged for 5.5 cents. They're building out a brand new sub just for that operation. I don't know exactly the dollar amount on that.
It was 300 million, I heard.
Is that what it is?
Yeah.
Okay.
Oh,
it's just insane, man. And so, not only is North Dakota becoming a good breeding ground for crypto mines, but it's also setting a pretty good idea or standard of the pricing that we're seeing these large entities pay, right? Yeah. Like 6 months ago, we were seeing that, nobody would touch below 3.5 cents, or nobody would touch it unless it was below 3.5 cents. Now people are signing, like you just said, $300 million deals for 5.5 cents, right? Yeah. And it's like the market has become saturated after trying to make everything illegal. But John, I'll let you. I know you're in North Dakota, you're mining. Maybe a little background on that and fill us in.
Yeah, absolutely. Like ours is really weird because with self-storage, we just kind of we did an expansion in 2018 with our storage facility. We added like 150 units. We were just getting full throughout the summer, so I was pretty excited. And then we dove into crypto like the end of 2020, mainly on the purchase side. We had some excess capital, and I was literally just buying at every dip. Anytime it dipped 15%, we'd just like pick off like 10K, like just at a pop.
Yeah.
Like I was like, whatever dollar cost average in, just wait for dips. We did that, and then like through 2021, like I think our returns are like 135%, just so crazy, like throughout the year, right? And then we kind of, I wasn't really like into mining basically at all. I kind of knew the gist of it, how it worked. Following the crypto market, we heard about China in July, right, when the hash rate just dramatically dropped. And I was listening to a couple podcasts, and they're like, hey, if you have those S7s or S9s, plug those boys back in, they're going to be profitable again. And I was like, I got to research, like, this is nuts, right? And it was only over July 4th, I was heading to the in-laws, and I texted my business partner. I said, guys, hear me out. Crazy idea. Let's mine crypto at the storage facility. And my other business partner is a huge like crypto guy too. He's like, yeah, let's do it. So that like whole weekend, I did all the research on basically everything, right? Like I was a noob. I didn't know anything, right? So when you're diving into it, and I'm just like, coming from a financial background, I'm like, man, like these numbers actually work. Like this is wild, like how good these numbers and the returns are. So it's like, hey, let's just order a couple machines right away. We'll know in a couple days if the numbers work like they say they do. Is the energy usage going to be 74 kilowatt hours per day per machine? Are we going to get the return in Bitcoin? I didn't know anything about the pool. I didn't know anything, right? Like I was just diving into all that. So we got our first machines, and then we built up in a couple months to like 15 machines after we found out it worked. So man, it was wild, learning about hash rate, just learning like, basically how the system works. And then, obviously we've seen a huge recovery in network hash since July. I was doing some research. I think they were saying that like 90% of the hash rate is like recovered already, which is pretty crazy. And then just some projections. I did like historical rate, like 3 years prior to the China ban, or when China went off the grid, there's about a 5% increase in network hash per month, right? So you could, maybe take that into consideration when you're doing some projections. But like over, ever since China, I think we've seen like a 16 or 17% increase per month. They're doing it every 2 weeks, or roughly every 2 weeks. So you're looking at like 8-9% every 2 weeks on average since then. So I'm thinking, maybe we got a month or two, and we're probably going to be at that pre-China hash rate, which was, I don't even know what it was, 190 exahash or something like that. And then hopefully when we get to that, I mean, maybe it slows down a little bit, but with, all these new facilities coming online, who knows? But yeah, it's definitely a different deal, like kind of doing projections, right? Because you don't know what the difficulty rate's going to be, going forward necessarily. You don't know the price of Bitcoin. I mean, historically, Bitcoin has increased 200% a year over the first decade. I mean, it can't do that forever, right? So maybe you get conservative and you're like, well, maybe it'll be 100% increase in the next year. Well, then if you do that compounded annually, that's like a 6% return. So I mean, that's conservative. That would put it like at 145 at the end of 2022. I mean, so if you're just running projections and trying to figure out, your profits and what you're looking to do and how you're going to use that income to, buy more machines. Are you going to put it in like a Nexo or a Celsius, and are you going to leverage it? What's your leverage? You don't want to go 50% LTV and get liquidated. We're going to see a 60% correction at some point next year again. Maybe it's, if Bitcoin hits 220 and it goes down to 100,000, hopefully we don't see it anytime soon. But there's a lot that goes into it, and trying to figure out, kind of the returns and what you want to do, especially if you're looking for long-term planning, like, how many units you're going to get. We're going to hopefully be ordering 30-40 units from you guys next week, which I'm pretty pumped about. And then if we can add 10 to 15 units a month, going forward until we get to whatever, is it 1,000, 2,000 units? Like, we don't know. But man, this is exciting, dude. What a wild times. Really exciting. So yeah. What do you got? What do you take on any of that?
So I mean, honestly, the first thing for me is like, I completely agree. And it's the Wild West that we're enduring right now, right? Like where we sit is we're in such I hate the word unprecedented because it's such a buzzword and it's overused, but in ways we're in that unprecedented time, because where we sit from that return perspective, like you just illustrated that so well. it's insane, right? Those 100% returns, like that's nuts, right? And there's so many people that are so excited to get into mining. And from my perspective, it's more than it's ever been. And so like I had a call yesterday from an individual who has, he's looking for 3,000 S17s to be hosted, right? And he's got power down in the south for, I think it was about 5.6 cents. And I'm like, don't lose that. Don't let that go. If you're getting hosted for 5-6 at that number of machines, like don't let it go. Yeah, and I'm telling him basically what we're looking at in our neck of the woods, sitting at about, 6-7, little above 7 cents for our power. And he's like, don't you think that's expensive? And I'm like, in a way it is. Like, there's no question. It's not necessarily the best deal, but honestly, like you illustrated with how much hash rate is coming online, all those miners in China that were made illegal are now coming over to our market and saturating it and just driving all the prices up, right? Mm-hmm. So, I mean, as times have progressed, like the popularity is growing, the demand's growing. But the craziest and the scariest thing is that the scams are growing along with it, right? Like you just can't find, that's the biggest hurdle in my opinion, or one of the biggest hurdles is supply, right? And to understand the supply, where to get your machines and how to get them at a good price. And then also the electrical costs, right? So like considering all those variables and then trying to project like you were illustrating it's very, very hard. It goes back to that Wild West scenario. I'll pass the ball to Chris a little bit here too, but I before I forget, I want to ask the question, you said you got into this in July. I mean, if you could do one thing different, from starting over, what would you do differently? I mean, to kind of fix your mistakes and kind of illustrate them so maybe people don't make them again.
Yeah. I mean, we probably could have planned a little bit quicker. I mean, we got a lot of lucky too. Like I have a lot of good contacts being in businesses. So right away, like I knew the scope, like, hey, I'm not very knowledgeable in this. So like, let's bring in an electrical engineer and then like basically favors, right? Like I'm not paying these guys right away. Right. But let's get electrical engineer. Let's get an HVAC engineer. How do we got to design these things? Like, and then we just bought a machine and it was like trial and error. Like I didn't know how much CFMs these machines are taking. I didn't know how hard they were cool. I didn't know they were kicking out 10,000, BTUs. And I didn't know that, the fans are roughly taking in, 400 CFMs per minute. So like, I didn't know any of this stuff. So when we got these engineers in, then you can start game planning. But one of the things I would do right away, if anybody's getting into it, is like, get the information, get like these guys who do this for a living. And then just start asking questions and then they do a plan. I mean, you'll get a guy that will buy a machine and then they don't realize they didn't get, you don't get plugins with it, right?
Yeah, and then you don't have
it's a 60 amp
power for it.
It's exactly. A 60 amp plug-in and you can't even use like people don't, if you don't dive into that, I could see people buying machines and like having no idea that you can't just plug it into your garage or whatever. And then, the noise, like, hey, there's 75 decibels. Like, what is 75 decibels? Turn on your, go out to your air conditioner and listen to how loud that is. And that's probably about 80 decibels. Turn on your vacuum cleaner, shut a door and see how loud it is. That'll give you a good idea of one machine. I mean, you start amplifying that. It's just doing research, right? I mean, I wish I would have even done it faster. And I wish I would have got into the game maybe a little earlier. Like the people who had the infrastructure in place and then the China thing happened. Oh man, were they crushing, especially if they were holding onto their Bitcoin. The biggest thing now, if you look historically, the miners, probably before even, 2021, a lot of them were mining and then immediately turning their Bitcoin into fiat or into USD. And then they were paying their bills or they were reinvesting that. Now you see a lot of the mining companies, we're just holding, baby. Like you just hold this shit. Cause like you're mining right now. Okay. What is it? Maybe what is it? Like 548 Satoshis you get probably per terahash right now. Mm-hmm. Okay. That's great. That's like 35 cents or whatever it is per terahash. That's right now. But if Bitcoin hits 120, what you're mining right now doubles, right? So you got to like keep that in consideration. And especially now that these platforms like Nexo and Celsius we talked about, man, when you can leverage and not ever sell your Bitcoin, that's insane. Like as long as you don't get over crazy, get like, a rule of thumb for us is like, hey, what if a market has a 60% correction, right? Well, they'll start liquidating your account at about 84% LTV, right? Even though you can borrow up to 50, once you get to 84% LTV on Nexo, they'll start doing the margin calls, right? So if you think if we have a 60% correction, you could theoretically borrow about 35% LTV on your account, and then we could have a 60% correction and you still won't get liquidated. So that's kind of the fine line, you like what we want to try to do if we're going to, you know, if we're going to use leverage. Obviously right now you could maybe push that up a little bit because we're probably not going to have a 60% correction right now at 60,000. Like it's very unlikely it goes to like 25,000. Now, if we get to the summer and it gets to like near 200,000, we could easily have a 60% correction. So that's when you want to, times where you don't want to be over leveraged, because when you see these big 60, 70% corrections, that's not people panicking and selling. That's literally people getting liquidated. Their margin calls are coming. They're over leveraged and they're forced to sell Bitcoin at cheaper. So that's like a majority of when you see a big correction. So, you know, I think everybody's getting a little more wise and hopefully not over leveraging. But like you said, dude, Wild West, crazy times. I love it. It's so fun.
Yeah. I'm interested to see what happens when all these bigger facilities in the US start coming online. You know, if you're seeing that 16% increase in difficulty right now, just think of what it's going to be in the summer next year. I mean, we saw that there's a 400 megawatt facility going up in Texas. There's 250 going up in North Dakota.
Yeah.
Like when all these bigger facilities start coming online, I don't know. It's going to be interesting to see how that difficulty starts to increase, especially for the small miners that maybe don't have a good electrical rate. You know, they're going to start to hurt a little bit. But
yeah, because theoretically, if you do, I mean, if you kind of do the math and you do, I mean, say the difficulty rate increases even 6% a month and the Bitcoin is only increasing 6% a month, you're going to break even over that difficulty rate if you're just looking converting into USD, right? So like right now it's like, what are you making? 34 cents a terahash. I mean, theoretically, maybe it stays like between that 35 and 40 cents a terahash, like profit, like forever. Like maybe it doesn't go up even if Bitcoin, it all depends. You know, the good thing, and you guys probably notice this more than I have because you've been in the game longer, but if Bitcoin tanks like tomorrow, people can shut off their machines and then the difficulty rate can go down, but it doesn't take effect for a couple of weeks. And it's the inverse as well. If Bitcoin goes up to, you know, like 150,000 tomorrow, yeah, they can turn on their machines back on, or more machines can get on right away, but you got like a 2-week lag in difficulty rate. So, I mean, that always plays into the game as well. But I've always thought, you know, like for us, we're paying like 7.6 cents, which is certainly not cheap at any point, but it's certainly not, you know, 10 cents either, you know, and our break even is like, you know, 17,500 if Bitcoin gets that low. But for us, like we're in a long game and we're not like selling any ever. So I'm like, if it dips to like, say, God forbid it went to like 30,000 and the hash rate goes down, we're just going to mine more. The difficulty rate will decrease. So we'll get more, you know, Bitcoin technically. And then we're just holding for the long run anyway. It's eventually, if you're a maximalist like we are, and you think in 5 to 10 years, it's going to get to 500,000, like it's an easy game. Like you just keep mining. And as long as you're not losing money, and as long as you don't have to take out a lot of your profits to pay your bills, I think that's a big deal, right? And then we're taking none home. We're like literally just stacking it and just seeing what happens. So
beautiful.
Each their own though.
Yeah.
Everybody's got different ideas or plans, but that's kind of what we're doing.
I got another question for you, because I mean, my perspective, you know, what did happen in April, May with that huge correction? I don't even think that was a correction, right? Like when China made everything illegal, if you think about it, that huge dip, in my opinion, and this is all just kind of just perspective, but when China made it illegal, all of those miners over there are literally having to move their machines, right? So they're liquidating or cashing out all of their crypto, absolutely, right? And so when it just plummeted, right? And so my question is, do you think that was a correction, or do you think that was just simply a global shift of miner operations, because we see that price climb back up over the subsequent months because they were getting plugged in Kazakhstan and Russia and, you know, in South America, maybe it'd be Venezuela or, you know, hydro facilities, and obviously Canada, North America, or United States, right? So
I think it's like a combination of all, honestly. You're exactly right. Like they were selling their Bitcoin. They were moving to Kazakhstan, they're getting to the United States, they're going to wherever, they got to get the shipping containers, they're trying to move these units. They need capital to do that. So they were cashing out. Well, then that initially, started the ball rolling, where maybe it dips 10, 15%. And then pretty soon now there's people over leverage, there's businesses over leverage, those margin calls come, they're selling. And then you get the whales involved and they know their competitors are over leverage. So then they're like doing the same thing, they're tanking the market. Like it's like cutthroat out there. Like you get a combination, just a couple of those things. And I mean, you easily have whales that have, 400 million to $1 billion where they can like actually move the market, especially in an unregulated market like this. So you're exactly right though, but it's a combination, and they're like cutthroat when they see their competitors over leverage and they see like a dip in the market. I mean, they're no stop. They're gonna sell and they're gonna liquidate their competition. So it's like a crazy thing. It's a combination of everything. Yeah. I mean, I just think it starts with something, right? I'm not sure if like the news starts it. Like I think like there's some news that happens and then it starts to dip, and then everybody just kind of uses the news as the reason. Like it's kind of weird, right? It's like a self-fulfilling prophecy, and I think Plan B kind of does that too. Like now I'm thinking like he's got so many followers, he does this prediction of the prices and his stock to flow model, and I'm like, he's just making it like come true basically, because everybody's like, okay, if Plan B says it's supposed to be at 93,000 at the end of November, everybody's like, oh, it's way undervalued, let's buy, right? And everybody buys and they drive up the price. And I mean, obviously his stock to flow model is eventually going to be proven wrong, but it's kind of a crazy thing. And especially when you start getting, this goes into a different topic, but you're going to start getting, the companies in the S&P 500, when they start adding it more onto their balance sheet. I mean, you even get 2% of their balance sheet if you took the top Fortune 500 companies. I mean, you easily get to like a $10 trillion market cap. Like it doesn't take long to get to gold. Gold is like 11 trillion. Like it doesn't take long to get to gold, especially when you start getting, some of these bigger companies involved. But getting back to, the dips and stuff like that. Yeah, I think it's kind of like a combination of everything. It's interesting to see. And it's weird to know, like, you're like, okay, there's going to be a 60% correction at some point. Like it's easy to say, but when you're living it in the moment and your portfolio is just like plunging, you're just like, this is wild, right? But you're just like, I've kind of disignore. It's kind of weird. I'm getting to a point like I don't even care what the value is in dollars. Like I'm just like, I have X amount of Bitcoin, X amount of Ethereum, and I'm just trying to increase that. Like that's it, right? Like it's irrelevant to me it's not totally irrelevant, but if you're literally thinking it's going to hit 500K or whatever in 10 years, it's like all irrelevant in the short term. And then people are just like, oh, if you know it's going to dip, you should sell. It's like, good luck trying to time the market. Like no one knows when it's going to happen. And then what if it doesn't? Then you sold your Bitcoin and now you just lost up on, a 50, 60% return that happened when it wasn't supposed to. So I don't know. I'm not huge into the swing trading or any of that shit, but there's people who do it, I guess. I don't know. It's crazy.
I don't know how they do it. I tried it. I got burned very quickly.
Yeah, it's not fun.
You only got to miss one trade. Like, you know what I'm saying? Like if you can't buy back in at one time, like it takes all your profits. Like it's crazy. And then the tax implications, God only knows like how ridiculous that is now. Like no one even knows how to really do taxes. We use Zen Ledger. I just downloaded all the transactions for this year in there, and I was like, oh, here's our return. Here's what we owe. Here's our capital gains. Like you're moving it, especially when you're moving it between accounts or exchanges, it gets really crazy.
Oh God, yeah.
Yeah.
We're not looking forward to that from both
Not
the
gonna be a
sales
fun
and the
time.
mining perspective. We're very, like it's so gray. It's scary.
Well, mining on that, and you guys are probably aware of this, the mining income, at least that's like, well, this is the cool thing about all ours going to Nexo. What Nexo does really cool is when you get your Bitcoin every day, if you're getting your deposit every day, right? They break it down into what the USD equivalent is at the time you get that deposit, and that's what you pay taxes on. So the rest of the increase would be considered capital gains if you sell at that time. So That's nice. But with Zen Ledger, they break all that down, and then you can go in there and just select all those transactions that are mining transactions, and then it'll filter it out. So, I mean, how crazy, there's all these other businesses that are, built on the back of mining or crypto. Like, I mean, Zen Ledger, I mean, they're charging, it's pretty affordable too. We did like the corporate one is like only $150 a year. I'm like, this is insane. I would pay $100 a month for this. Like,
Right.
this is crazy. When you're
Wow.
having, 5,000 transactions a year, like 150 a year is just like a no-brainer. I'm like, this is our accountant is so pumped. He looked at, because you can give on Zen Ledger, you can give your accountant access like to the account too, and he can just go through, look at the transactions. It saves them so much time. And then it prints off every single tax form you can imagine. There's like 10 of them. They're just ready to go at the end of the year. You just hit print, your accountant files them, and then you're just like, hey, I'm not an accountant. These are the forms that came about, and this is how the taxes came to be. And you're kind of, at least you're not liable, right? Or negligent. You're not like trying to evade taxes. So it's wild.
Hey,
it's so cool that there's all these other businesses.
Disclaimer here, we're not giving
Yeah.
tax advice.
This is not a financial advice, and I'm not a tax.
Yeah, none of that, right? But shout out to them, man. They're doing it well.
That's awesome.
Honestly though, that's another big topic that we could talk about all day. Taxes are going to be so crazy, and on it, I'm reluctant to dive into it because we're not professionals at that avenue, right?
Yeah, I'll just say this, and we can get off the topic. Like, the IRS is like gonna come for it eventually, right? Like, it might be a couple years, but like, if you're someone who's doing the trading, day trading, transferring back and forth, and you're not paying taxes on all of it at all for like a few years, like, it's eventually going to come. I mean, when the SEC, and this is going to happen if you guys follow this within probably a year, Gary Gensler is the chairman of the SEC. I mean, they're basically going to make stablecoin securities. Like, that's going to change the whole game. And then if they start doing that with all the altcoins, I mean, this is, again, just my opinion, like 90% of all the altcoins are going to be gone, like, off the exchanges, because they'll be listed as securities. If they're listed as securities, they're not going to provide the paperwork and the backing that they need to be a security. So these exchanges are going to be forced to delist them, just like they did to Ripple. So I think in the next year or two, like, that's going to be a big thing. And honestly, that's not a bad thing for Bitcoin, because he's pretty bullish on Bitcoin. He's like, there's Bitcoin and Ethereum and everything else is like a security possibly, that's kind of how he's stating it now. But it'll be interesting to see 2022 and 2023, how they handle the stable coins, how all that happens. And then that'll help with the tax implications. And then banking, like, me coming from a banking, that's a whole nother world. Like, if I was a financial institution, I would be doing everything in my power to get custodial holdings of Bitcoin right now on my balance sheet, like, for the future, because then they can lend against them, and they can provide like things that Nexo and Celsius are doing. You could leverage against them. You could, I mean, it's just makes sense for a bank. Like, if you want to be relevant, I think, again, this is just all personal opinion. If you want to be relevant, I think in the next 10 years, I mean, I think only like US Bank is doing it right now, or trying to do it. I mean, I'm sure there's a bunch of security laws and stuff, but that's going to be huge, like, upgrade for crypto. I think in the next couple of years will be all the banking regulations, but it's got to happen.
Yeah. I mean, if the banks want to survive, they got to get into crypto for sure.
Dude, the people that aren't familiar with Nexo and Celsius, like, I don't know if you guys dive into that, but dude, Nexo is like, they're giving like 5% on Bitcoin and crypto, and 10% on stable coins. You could literally take your cash, don't have a savings account, put it in a stable coin, which is tied to the US dollar, and you're getting 10% APY. Like, this is insane.
Yeah.
Like, I mean, this is like 1980s. I think you're getting like, interest rates are like 18%, and you could get like 10 to 14% on your savings account or CDs. That's the last time anything like this has happened. And I mean, and they're doing it, and they're 100% collateralized. Like, Nexo hired some company out of the US, out of California, to do their asset management, and they do it live. Like, you can go on their website, check their asset management. They got like 15 billion in assets, and they're 100% collateralized. meaning like banks aren't 100% collateralized. They're meaning they're like got all their collateral and backed by every dollar that they're lending or borrowing or taking in. It's like, that's insane. Like it's such a financial revolution on that side. So, and those are totally separate businesses from, you know, mining or from Bitcoin. And there's a lot of opportunity there as well. I mean, it's just crazy from a banking background and being in banking my whole life. This is like insane type of stuff. Yeah.
I mean, if you're putting your money in a bank account, you're losing 6% this year, you know.
6.9. I was just looking at that. You guys got all of it covered. 6.2% the CPI year over year. What's crazy about this is people don't realize, this will blow your mind. If you go back, they used to they actually changed the formula or the algorithm how to calculate CPI. If you use the actual CPI calculation that they use in the 80s, like when it came out, our year over year inflation is 14%. Like not this 6.2 transitory bullshit. I'm sorry if I swear on this, but this 6.2 or 6.9, like that, everybody knows inflation's higher than 6.2%. Like, are you kidding me? You don't have to be a rocket scientist to go around and like figure out what the inflation is. So yeah, I mean, so if you think about 6.2, a US bond right now, you're getting 1.5%. So let's just say that the inflation is 6.2 and you put in a 10-year treasury bond at 1.5%, you're literally losing 4.7%. Like you're lighting money on fire. You're a negative return rate on your cash. Like, and if it's 14%, which is probably the more accurate number, you're getting crushed. Like you're losing, like you're just burning money. Like anybody sitting on money is crazy. Like everybody knows right now that the rates are historically low, and a couple things happen when rates get historically low. Asset values that are all-time high, right? So anytime you get rates low, it jacks up the asset value. They kind of correlate pretty well. So you have all-time high asset, all-time record low interest rates. They can't really move the interest rates any lower. I mean, they're just printing money. Like 30 to 40% of all currency has been put into the system in the last 18 months. Like, and this isn't just the US, this is like globally, like this is a global issue. So it's going to be really interesting because of the major countries. As soon as one defaults on their debt, like a major country defaults on their debt, like we're going to see one of the biggest corrections. Like 2008 will look like peanuts compared to when like countries start defaulting on their debt. But this kind of gets off topic of Bitcoin, but it's all relevant because like people are using Bitcoin to hedge against this inflation is kind of where I'm going. And, you know, it's all tied together with the SEC chair and, you know, with inflation, and man, it's just, there's so many moving parts and it's just so interesting. And I just think like having crypto is it's such an awesome thing to have at this time. Like I always tell my business partners, like, how you're so lucky to be our age and be alive right now when crypto is like getting mainstream. Because say you're like 15 right now, you can't take an advantage of it. And if you're like 80, you're probably not going to take it. But like, this is like insane. Like this is once in like 100-year thing, a financial market that's coming around, and we're like in the prime of our ages. It's just like, we got to take advantage of this. This is we'll never see anything like this in multiple lifetimes, I don't think, ever.
Dynasties will be built off of this. Family-based dynasties, I mean, business dynasties, you know, it's going to be insane. The Rockefellers were not always the Rockefellers, right? The DuPonts were not always the DuPonts. We're going to see new generational 1% wealth come into play. It's insane. It's crazy.
100%. Especially like, I mean, what Marathon and Riot and these miners are doing, these facilities are so massive. Like what's Marathon? You probably know better than me. Like 8% of all the network hash comes from like Marathon. And like, I think in the US, like Riot's like 6% of all US hash rate. Like these guys they're just building like, I think one of them's building like $1 billion facility or something. Like this is insane stuff. Like, yeah, it's wild. I think we'll look in 10 to 15 years, it'll be like, everybody in the top 1% will be like some crypto type of, you know, either investment or they bought and hold or they did mining. Like it's just the way it's going. Like, and the banks will get on board eventually. It'll take years, but I mean, it's gonna happen. I mean, because you just can't have the fiat currency is just not, it's not working correctly. And it's pretty amazing that, you know, Bitcoin came around the way it is. But yeah, you guys are on the right track. I love all this shit. The banking stuff is really, I love it all.
Beautiful. Beautiful. Well, we can't do this all day, but I'd love to.
I could do it all day. No.
Yeah, there you go. But I mean, honestly, let's close it up. You know, from I guess an informational perspective, I think we're doing our job, just disseminating what we know and laying it out there. I mean, guys, if you have any questions or comments for John, hit us up. We'll relay the information. I mean, John, you want to let people know, do you guys have a handle or anything like that for what you do?
Yeah, you can hit us up, email basically through our Verzity or through our self-storage. It's Verzity storage. So you can email me at John, Jon at verzitystorage.com, Verzity storage.com, or check out our website. It's just Verzity Storage, and we have all our contact information and all our social media handles on there. So hit us up. Love to talk crypto. We've actually got pretty lucky. We've actually had a couple managing partners like approach us lately, thinking about like fund managers and stuff, because the financial stuff is like really fun for me. So we'll be diving in that in the next couple of weeks. I have no idea what direction that's going to go. Don't even know how a lot of that works if it comes to raising capital. But yeah, I mean, honestly, I'd like to keep everything in-house too, but there's benefits if you can build faster. I mean, it makes sense. You look at most of these, majority of these large mining farms have, raised capital somewhere along the way. So, but yeah, I'm just exciting times. I can't wait to see where it is in like a year to 5 years. And I'm hoping we're getting all our machines from you. So this could be a good partnership.
Beautiful. Well,
Definitely.
I mean, as always, it's been a wonderful chat. I got to give a shout out to our followers for just listening and giving us a chance. So thanks for watching and listening. You can find us on Twitter, Musk Miners. You can find us on Reddit, Musk Miners, Instagram. I'm Blake Greiner. Chris, you want to close us out?
I'm Chris Wavra. We appreciate you guys, sticking around, and hope you learned something today. I mean, you probably learned a few things, which is great, but we'll see you next time.
All right,
boys. Take care.